getting too many notifications. It keeps messing up the screen recording. Hi guys, so today I wanted to do a video talking about my Trading 212 portfolio. So all my other portfolio updates have been free trade, and that's because the majority of my investments at the moment are in free trade. However, I've had a few questions about Trading 212 and what I've got in there and my ISA and things like that. So I just thought I'd do a very quick update on what my Trading 212 portfolio is looking like and just sort of talk you through a little bit in terms of my strategy.
We just sing along, and I can't help but feeling just loving.
I do want to point out though, although I've said this before, I am not a financial advisor, and none of this should be taken as financial advice or investment advice. You should do your own research into all the stocks that you decide to purchase. So I have two accounts on Trading 212. I've got the Invest account and the ISA account. I've mentioned before, CFDs are not something that interests me. I have no plan at all to go anywhere near CFDs. They are for very advanced traders, and as I mentioned in my last video, the majority of people lose money trading CFDs. Anyway, so I'm going to start with the Invest account first. So as you can see here, I've got a portfolio of £245. and that's including a return of £11, which is fairly good. And you can see at the bottom here, my first investment is Apple. So probably the first thing I should say is, although I'm mainly a dividend investor, I've decided that my Invest account in Trading 212 is going to be a bit more of a growth stock account. So free trade is still going to be my main dividend investing portfolio, as will my ISA on here. However, for the Invest account, I've just decided that on here I will have a few growth stocks that I just won't touch for a while. So the first one is Apple. I believe in Apple quite a lot. I've used Apple equipment for a long time. I've got an iPhone, I've got a MacBook Pro, I've recently purchased a new MacBook Pro. It cost a lot of money. So I think the company is great. I love their equipment and I believe in them. So you can see here I've got £57 in Apple, and that equates to 0.183 of a share. So that's not a lot, but Apple shares are quite expensive, so I just figured I'd get in there as soon as possible. As you know, in my portfolio updates, I don't really go through all the ratios and analysis of each stock. I've asked before whether people would be interested in it, and I've not really had a big uptake on that, so I'm not going to introduce it in now. However, I'm happy to do that as like separate videos if people want to sort of have like generic portfolio updates and then more sort of in-depth going into each of the stocks that I own. But you can see here, brief financial summary, and this is why in my previous video I mentioned that Trading 212 has so much more information than free trade does. And although I still prefer free trade, I wish that they'd had something like this on their app. But you can see here, Apple, for the 26 weeks ended 28th of March, Apple revenues increased 5% to 150 billion. And net income increased 6%. Again, they're a great stock and I firmly believe in the company. So that's that. The next one is Astra Zeneca, and that's £89, of which £3.50 is the gain that I've made already. Astra Zeneca was actually a free share that I got from referring someone. So normally I sell all my free shares and then put the money into a company that I want to invest in. But I was quite pleased with this, and so just decided to keep it. You can see here the graph of the share price of Astra Zeneca is pretty consistent going upwards, and although past performance is not an indicator of future performance, they have done really well. They are a healthcare company, which I think at the moment is quite a strong sector to invest in, so I've just kept the share. We'll see what happens with it. The next one is Pfizer. So this is a new addition and it's only £8, and it's only because I sold my last free share recently and put that into Pfizer. There's been talk of Pfizer working on the vaccine for a certain thing that's happening right now, and I realized that I might as well, like, it was a free share, I'm gonna give it a go. You can see here at the moment it's dropped 2 pennies since I've invested, but I'm not too worried about that. Again, they are a healthcare company. You can see here, biopharmaceutical company. They've got pretty strong ratios, and I think the prospect of them working on a vaccine makes them a potentially good stock to hold. And finally, we have Tesla. So I was so scared to invest in Tesla for the longest time, and now I'm obviously kicking myself because I could have invested in it such a long time ago when it started going up, but I just kept telling myself, like, it won't go up more, it won't go up more, it'll crash, it won't go up more. And it kept like beating my expectations. So The other day I just bit the bullet and I essentially just sold all my free shares and put them into Tesla. Again, they're free shares, so it's not like technically like my own money, but so far it seems to be doing okay. It's up 6% from when I invested in it, so that's not too bad. I do still think that there's a chance that Tesla will crash, and that's sort of why I haven't put much more into it, but again, I'll probably be kicking myself in the future. I do genuinely think it's probably overpriced, but I mean, look at that graph. It just terrifies me. And I've had comments of people asking me why I don't make my portfolio mainly a growth portfolio. It's because I can't really handle the risk. I want to be with companies that I know will be giving me dividends, and I know that's not 100% safe. You know, Wells Fargo recently cut their dividend massively, although they were a safe bet because they'd been paying dividends for a really long time. But a lot of it is due to personal preference, and I personally just prefer dividend income and companies that grow dividends, and just generally dividend companies. So next I'm going to go into my ISA. So you can see here my account value is £273, and essentially all of that sits in Realty income. Realty is an interesting one because it was meant to be like my safe stock, my monthly income dividend stock, and it's crashed a little bit. And although normally a stock going down in value wouldn't scare me, because obviously there's ups and downs in the market all the time, and I would personally most of the time see a company share price dropping as just like a sale on a share, I'm really nervous with Realty because I just feel like this whole situation in the world where companies are now going to be looking into working from home more often and cutting their office space, and you're seeing it more and more with places like, I think Twitter announced that all their employees will be working from home going forward. And there are a few other companies which I know from personal experience, from people I know who work in those companies, that they are looking to now reduce their office space and have more of their workforce working from home. I'm just really nervous about how that's going to affect companies like Realty. And although I was planning to put a lot of my money now into Realty to get that monthly dividend, and their dividend yield is really high. You can see here their dividend yield is 4.87%. That's really good, which is why I wanted to put a significant chunk of my money into Realty. Part of me at the moment is just shying away from the risk of like commercial real estate. So I'm not quite sure what I'm going to do, and I don't normally ask for advice, and I still get a lot of unsolicited advice in my comments, but if you have a view on Realty, I would really welcome it in the comments below, because I just feel incredibly nervous about it. That's essentially my Trading 212 portfolio. I told you it would be a short and sweet video. I will keep the portfolio updates going. I will do a free trade one soon. I'm trying not to overdo it with the portfolio updates, although I know there are other channels which do them a lot more regularly. So again, let me know in the comments below what you think would be a good amount of time in between the portfolio updates. And yeah, see you in the next video. Bye.